When it comes to building wealth, two of the most popular paths are real estate and stocks. Both have created countless millionaires. Both have their advantages. And both come with risks. But which one is better? Which one should you choose if you want to build long-term wealth? The truth is, it depends on your goals, personality, and strategy. In this video, we'll break down the real differences between real estate and stocks so you can decide which wealth-building path fits you best, or whether combining both is the smarter move. 1. What is real estate investing? Real estate investing means buying property with the goal of generating income or profit. This could be a rental home, a commercial building, or land that you hold until it increases in value. The main appeal of real estate is that it's a physical asset, something you can touch, see, and control. You can rent it out, renovate it, refinance it, or sell it later for a profit. Many people love real estate because it feels more stable and less volatile than the stock market. 2. What is stock investing? Stock investing means buying shares of companies, usually through the stock market. When you own a stock, you own a small part of that company. If the company grows, your investment usually grows too. You can earn money through dividends, which are company profits shared with shareholders, or through price appreciation if the stock goes up in value. Stocks are easy to buy and sell, often with just a few clicks. They're also highly liquid, which means you can quickly turn them into cash when needed. 3. Return on investment. Both real estate and stocks can offer strong returns, but they do it in different ways. Historically, the stock market has returned an average of about 7 to 10% per year over the long term, depending on the index and time period. Real estate can also offer high returns, especially if you use leverage, borrowing money to buy property, and the value of the property increases over time. With rental income added in, some real estate investors achieve returns of 12% or more annually. However, returns in both areas depend heavily on timing, strategy, and skill. 4. Cash flow versus capital gains. One big difference is how you earn your money. Real estate is known for cash flow, the monthly rent you collect after expenses are paid. That cash flow can be reliable and can even replace your job if you own enough properties. Stocks, on the other hand, are more focused on capital gains, the increase in value over time. Some stocks do pay dividends, which provide a form of passive income, but it's often smaller than rental income. If you're looking for regular monthly income, real estate often delivers that more consistently. 5. Risk and volatility. Stocks are known for being more volatile. Prices can rise and fall daily, sometimes sharply. This can create stress for investors who watch the market too closely. But the advantage is that stock markets are regulated, liquid, and historically bounce back after crashes. Real estate tends to move slower. Property values usually don't drop overnight, which can make it feel safer. But real estate has its own risks, such as bad tenants, property damage, or market crashes like the 2008 housing crisis. No investment is completely risk-free, but the type of risk varies. 6. Time and effort. Another key difference is the level of effort required. Investing in stocks is almost completely passive. You can invest in index funds or individual companies and check your portfolio a few times a year. Real estate is more hands-on. You have to manage properties, deal with tenants, maintain the buildings, pay taxes, and sometimes handle emergencies. Even if you hire a property manager, you still need to be involved. So if you want a set it and forget it investment, stocks may be easier. But if you don't mind putting in work, real estate can reward you more directly. 7. Liquidity. Liquidity is how easily you can access your money. With stocks, you can sell your shares almost instantly and have cash in your account in a few days. That makes them very liquid. Real estate is much slower. Selling a property can take weeks or months, and there are closing costs, taxes, and paperwork involved. If you suddenly need cash, stocks are easier to convert. Real estate ties up your money for longer periods, which can be a disadvantage in an emergency. 8. Taxes. Both investments come with tax advantages, but real estate often offers more powerful benefits. Property owners can deduct mortgage interest, property taxes, maintenance costs, and depreciation, even if the property is increasing in value. This can significantly reduce taxable income. Stocks have fewer deductions, but if you hold them for over a year, you benefit from lower long-term capital gains tax rates. Dividends are also taxed, depending on your income level. The tax code tends to favor those who understand how to use real estate to their advantage. 9. Accessibility. Stocks are more accessible to beginners. You can start with as little as a few dollars using apps or online brokers. Real estate usually requires more money up front, for a down payment, closing costs, and repairs. It also requires good credit to get loans. This makes it harder for some people to start with real estate. However, there are ways to lower the barrier, such as house hacking, real estate investment trusts, REITs, or partnerships. Still, stocks are typically easier to begin with. 10. Building long-term wealth. Both real estate and stocks can build significant wealth over time. Real estate offers leverage, cash flow, and tax benefits that make it a powerful tool for wealth creation. Many people have used real estate to retire early or generate passive income. Stocks, on the other hand, offer simplicity, flexibility, and compound growth. With time and discipline, stock investors can also become millionaires, especially through long-term investing in index funds or growth stocks. Which should you choose? There is no one-size-fits-all answer. If you prefer low effort, high liquidity, and simple investing, stocks may be the better fit. If you want more control, monthly income, and tax advantages, and don't mind putting in some work, real estate could be your path. Many successful investors use both. They diversify their wealth between the stock market and real estate to enjoy the benefits of each. The most important thing is to start with what you understand, stay consistent, and keep learning as you grow. Real estate and stocks are both powerful tools for building wealth, and you don't have to choose just one. The best strategy is the one that matches your goals, lifestyle, and risk tolerance. Focus on building strong financial habits, increase your income over time, and invest in what you understand. Whether you prefer properties or portfolios, the journey to wealth begins with action, not perfection. So start where you are, learn as you go, and keep building. Thanks for watching. Whether you're leaning toward real estate, stocks, or both, the key is to start learning and take action. If you found this video helpful, don't forget to like, subscribe, and hit the bell so you never miss a new video on building wealth and financial freedom. Got questions or want to share your experience? Drop a comment below, I'd love to hear your thoughts. See you in the next one.